I think we can all agree at this point that buying real estate is super simple in 2025. But to get it right and to scale up a portfolio so that you can actually retire is actually quite difficult. And it's why less than 0.1% of Australians actually get to financial freedom with real estate investing with 6+ properties in their portfolio. So in this video, I want to break down exactly how a system can help you, how a team potentially around you will allow you to scale up your portfolio even faster, and essentially looking at any costs involved with acquiring these investment properties as an investment rather than a cost will allow you to have the right frame of mind when it comes to building wealth with real estate. So let's dive in. Now I want to show you how the right systems and the right team can help you excel with retiring faster with smart property investing. Now in this short video, what you can expect is a little bit more about who I am, what I'm about, and you may have come across my content recently and you might just want to know why I'm here talking about real estate and why I've been talking about it publicly for over 5 years. I also want to break down exactly what my buyer's agency does. So despite me making a lot of YouTube content and also being the best seller in the real estate and mortgages category with my book, Retire Filthy Rich with Real Estate, I actually run one of the fastest growing buyer's agencies. We have over 50 full-time staff at this point, and we've helped purchase over 1,000 properties. So we know a thing or two when it comes to buying properties. I also want to break down what the step-by-step process actually looks like, so you have a bit more of an insight as to how a buyer's agency like Search Property could help you. I also want to share with you some client stories, some real numbers. So we may look at the theory and say, well, I don't think this is possible. I want to show you some examples of people who've done it and done it time and time again. And I also want to go through some frequently asked questions and what do the next steps actually look like. Now, a little bit about my story. Now, I'm going to leave some timestamps below so you can go ahead to the sections you want. Now, I actually bought my first property at the age of 22 for $190,000. It was a 3-bedroom brick house in regional New South Wales. And I promise you at that time, it still felt scary and it was also very expensive for me. So if we look at property prices today and they might be at 400, 500 or 600K, just know that the same feelings you're feeling right now is exactly what I was feeling back then. Now, from an education point of view, I went to UTS, I got a bachelor's degree in business. Soon after that, I got an advanced diploma in conveyancing. I got the certificate 4 in finance and mortgage broking, eventually getting my class 1 license in real estate as well. I ended up starting up Search Property in Feb of 2020. Now, if you take a look back at what Feb and March of 2020 looked like, it was mass fear. And it was the time that I decided to go all in because I realized at this point, most people need the most amount of help. So that's why I went all in to Search Property, and since then we've grown from just myself to over 50 full-time staff. Now in terms of awards, we've been finalists for so many awards. I also got named by Elite Agent as one of the top 100 influential people in the real estate industry, and along with that being awarded the Young Entrepreneur of the Year for New South Wales in the real estate category. My personal portfolio is well over $15 million, and I did that by the age of 32. So a lot of this wealth was generated before I was making good money, running my business. It was all through working normal 9-to-5 jobs, taking up second and third jobs as side hobbies, which eventually turned into their own businesses. But the idea was that you needed the right strategy, right planning, and you could still go ahead and execute and build financial freedom with real estate with an average income. So you don't need millions and millions of dollars to be able to do something like this if you have the right systems. Now, I don't tell you all of this stuff to flex. It's more so to give you some perspective and context around why I do come out, talk about real estate publicly, why I've been personally investing for over 10 years now, and why I might be the best person to partner up with when it comes to building your own financial wealth in real estate. So why is this important? This is very key, so I'm going to read it straight off the slide. If you want to go somewhere, you would rather go somewhere with someone who has been there before. Build with someone who knows the rules of the game so you can avoid the mistakes most people make. If you're in your 20s and your 30s and you're deciding to scale up a portfolio, would you rather do it with someone who's been living and breathing what a 20-year-old goes through, or would you do it with someone who's in their 50s and 60s using outdated methods? That is the whole idea here. You need to align yourself with people that 1, you get along with, but 2, and most importantly, are active in today's market. They're going to be closest to the ground to know exactly what works and what doesn't work. And when banks change policies or the next hotspot location comes up, you want to be in the right conversations. You might be at this point and say, well, okay, this all sounds great, but I'm pretty sure I could just buy this myself. Now, you don't want to fall for this trap. If you think buying real estate is easy, it is, but there's a reason why less than 0.1% of Australians ever get to 6+ properties. We have numerous clients past that point, and the reason for that is because there's a system in place to be able to do it. If something is easy, it's likely most people are already doing it. And I always talk about this when it comes to fitness. If you think about getting six-pack abs or whatever your fitness goals are, like 10% body fat and whatnot, you'd think, well, it's actually pretty easy. And on the surface level, it actually is. You eat really well, you train really hard, and you repeat the process. Yet, there's very few people walking around with less than 10% body fat and ripped abs. And that's because in theory it's easy, but to actually execute it's quite difficult. So buying property is easy, buying the right property in the right location at the right price is actually extremely difficult. Now, I don't want to waste your time, and I'm going to tell you up front if this video is for you and if you should continue. So if you can honestly answer yes to these questions, then you should probably keep watching. I want to invest passively and enjoy my lifestyle today. I want a property portfolio that grows with little to no money from my pocket. I want to outsource the research and leverage the expertise of a team to guide me through this process so I avoid mistakes and make above average results. I have the money and I know it's important, but I feel stuck with not knowing what my next move should be. I see people making money from property. I want to as well, but I don't know where to start. If you're answering yes to all of those, let's continue. Now, realistically, you have two options. Option one is you try and do it yourself. You may have already tried this, you may have made some mistakes, you probably don't have enough time because you're competing against people like myself and our team that are doing it day in, day out. And I can tell you now, our sourcing team works pretty much 7 days a week. I get emails at 8 a.m. on a Sunday, and I also get emails on 11 p.m. on a Thursday evening. They will outwork me and you, and that's why we have that dedicated team to go out there and find the best deals. You may also have analysis paralysis. You might go online and say, okay, there's 5 people I follow, and each person has a different strategy. And then you get caught in between saying which one is better than the other. And then the same thing happens when you finally figure out the strategy, or you think is the strategy, to go and buy property. And you think, why would I pick this over this? Is there something better around the corner? And suddenly you don't make a move at all. You might also lack the confidence to make that first move. For me personally, that's exactly what happened when I was buying my first couple of properties. You just second guess yourself. You can look at all the numbers, be 100% in terms of confidence. As soon as you have to go and sign that contract, your confidence falls. You will never be 100% certain about the decision. And this is why you need the right people around you, because they will help you move logically in what should be a business investment rather than an emotional decision. If you buy the wrong property, you will lose value. So despite what everyone tells you, property always goes up. There are properties out there that have not moved in more than 10 years' time. And you would have just paid more interest, lost more money, and the opportunity cost would kill your loan. Now, option two is you can outsource the entire process to a team of experts. I wish there were more things like this when I started, because I could have moved a lot faster and I would have built a lot more wealth a lot faster. You can go ahead and leverage a team that has the experience, and you can utilize strategies and tactics that you may not be aware of, but experienced investors are totally across. And as a result, you can go ahead and avoid a lot of mistakes that investors make, especially first-time investors, and that could cost you years, which means your portfolio may not get to the level that you want, which means you don't get to financial freedom. Having the confidence to be able to move fast through this process is going to be your biggest advantage. We know that property is scarce in Australia, and if you don't have the right conditions, you don't have the right people around you to move at speed, you will continue losing out on properties time and time again, or overpaying for something, and that's where you're really going to get stuck in building your financial freedom tool. So let's focus on how we do things. Now, at Search Property, we are focused on building wealth with clients by growing their portfolios. As a buyer's agent, we get paid per property. So, being completely transparent, the more properties you buy, the more we get paid. Now, if you think, well, that means you're just gonna push really cheap properties because then you can continue buying, then yeah, you're right. And that's what some agencies do out there. They'll go and flog units to you that are 100K, 150K, just to say that we have a bunch of properties and look how many properties I own. But over years and years of data and experience, we found the sweet spot. And right now in this market in 2025, the sweet spot is anywhere between 450,000 all the way up to 700K. Now, could you go ahead and buy properties for more than that? Yes, but this is the sweet spot. And historically, if you want to make the best returns in property, this is the range that you want to be in. The other thing we only focus on is existing properties. We don't care about the new properties. We don't care about buying off the plan because there is far too much risk, and you want a repeatable system. You may do really well with one house and land package or an off-the-plan property, or you may have bought the new property because your accountant told you you can get some depreciation and reduce your taxes, but that might be just a one-off. What we want is a repeatable system. So you can scale up your portfolio just like you scale up a business, because you know that if I put A as the input, B is the output, and we want to repeat this process. Our focus is on good cash flow and high capital growth. You can get both. I've been doing it for over 10 years. And based on our experience at Search Property, helping over 1,000 clients at this point, we know what works and we know what doesn't work. We've trialed and tested so many things. We've made mistakes in my personal portfolio to be able to go and streamline things for clients like yourself. To prove this, I will share some client testimonials and results, and you can find a bunch on Instagram as well if you just search up Search Property. Now let's dive a little deeper into the situation that we're in right now. Sam, who is 32, specializes in IT, has been working really hard to save enough money to buy a house. He works on average 50 to 60 hours a week, and by the time he gets home, he wants to relax and unwind. After 8 years of saving and working long hours, he decides to buy a house. He asks people at work about their opinion, asks friends what they did, and ultimately decides to buy an apartment near his work. He is asking the wrong people the right question. This will result in guesswork and most likely a terrible outcome. Despite everyone thinking every property goes up in value, this is 100% incorrect. Imagine asking the right questions to the right people. You might be out there working really hard, generating an income, and you're looking at building a portfolio that gives you the returns you want. You might just invest into ETFs because it might seem a lot easier. And you're right, it's a set and forget. But if you really want to get outpaced results, you need to be going out there, finding the right properties in the right locations and using leverage to be able to excel your wealth. I'm not saying that property is better than shares. What I am saying is that you need both to be able to get to where you want to be. I personally was invested in shares. I sold everything, went into property, and I've never looked back. Now, could I go out there and come back into shares later to diversify my risk? Of course. I want to be on the fastest vehicle to get to my goal, and then I can start minimizing my risks. And the best way to do that is to be asking the right questions to the right people. It can be really bad if you ask the wrong questions to the right people, or the right questions but to the wrong people. Now, a study done with Aussie Home Loans and CoreLogic came up with this number, which extrapolates the median house values by 2043. And this is in less than 20 years, we could see prices in Sydney for a house be worth more than $6.3 million, Perth more than 2.4 million, Melbourne more than 5.8 million, with Greater Hobart, Darwin, Canberra, Brisbane all recording 2 million plus, and Adelaide very close to that. That's about a 6x from today in less than 20 years. And that stuff really scares me, because the next generation are really screwed. Every generation we've seen over the last 50 to 60 years has struggled with home ownership, and that is only going to get worse. So if you're someone who's got young kids, or you're someone who's thinking about having a family, you've got to be thinking about how you protect your wealth, grow your wealth, so you can set your kids up for success later on. You don't want to be in a position where you get to live here because you bought one property next to your name, and unfortunately your kids have to live overseas because they can't afford it here. That is the reality, and I know it's sharp, and I know it's not something you want to hear, but that's the reality. What you want to do is protect your wealth, and a great tool to do that is to take up leverage, taking up debt, when it's backed with the right strategy against property. You can see here things that you could have bought for a lot less than what you can buy them for today, and that's because inflation is eating away at the dollar. So despite values of property going higher and higher, it's not because the house itself is worth so much more, it's actually because the dollar that you buy that property with is losing its value every year. A really easy example to understand how this works is the same $100 that I have today will buy me less next year, and usually it's anywhere between 3 and 4%. So that means that the $100 worth of groceries I get today will only get me $96 or $97 worth of groceries next year. So you're losing that value, especially if you're not growing your wealth. And you want to do that with debt and have the right cash flow practices in place so you can hold on to your assets for as long as possible. In terms of our process, it is very simple. I'm going to walk through them. You can pause the video here, but equally, I'm going to have links in the description box below where you can chat to our team completely for free so you can think about what does the next move actually look like for you. To get started, you would go ahead and sign the agreement. Once you've spoken to our team, you'd pay the deposit. You'd then go ahead and get a dedicated account manager who will then help build an acquisition plan. We'll have that with our strategy team as well as the account manager. Based on those goals, we will go and reverse engineer it and go out there and acquire the right properties. Our sourcing team is dedicated to that. We see over 100 properties every single day. That means across a week, we could look at 700 properties that's going through our system. And from that 700, we're sourcing anywhere between 20 and 25 every single week. which means the quality control is at the very highest level, and it also comes down to our due diligence process. Once we have sourced the right property, we go and negotiate on your behalf. We do all the running around, we talk to the agent, go back and forth and talk their lingo to get you the best price. Now you may think, well, we're not incentivized to get the best price because we get paid a fixed fee regardless. And the best way to understand why this works for you is because for me, I want to work with people who want to work with us long term. The only reason you're going to work with us long term is if on the first deal, we got you a cracker deal that made you a lot of money. As long as I'm making you more money than you're putting out, you're going to continue using the service. And that to me is the long-term value of helping you as a client. So rather than trying to just, take a little bit off the top and just make as much as I can on one property, screw you over, be in a position where I get to give you so much value that you will continue coming back and using the service. When you figure out that you can do this on autopilot, you've completely outsourced everything, you have a dedicated team, dedicated strategist and account manager, it means that you're going to continue building your wealth in the background while you continue to enjoy life and, obviously your job. We help organize everything from the pest and build inspection to the walkthrough inspections to getting you in touch with the conveyancer and even the mortgage broker if you need it. We confirm settlements and then we go in through a process of checking in every 3 to 6 months, if not more. This would really depend on what your strategy looks like, what your acquisition plan looks like, and we want to be there to be able to guide you through as fast as possible to get to your goals. The way you need to think about this is it's our work, but it's your results. Our holistic approach means you take the guesswork out of buying the right property. So you've got lead and lag data, you've got the strategy that comes together to buy the right property. That's what we do. But we need to match that with your goals. So what we look at is your cash flow analysis and economic analysis to find out what the right property is, how much it's going to cost you, and we give that complete breakdown to you upfront. From there, we found the right opportunity that matches up with your goals, and that's going to be repeated every single time, and it will evolve. And that is what you need to know, is your vision and strategy needs to keep evolving. You can't just go out there and say, oh, I've got a fitness plan. This is the same thing that's going to work for me over the next 5 to 10 years. Same thing, you can't just go out there, do a strategy session and say, cool, I've got the plan that works today. I've got the roadmap and that's all I need. I've helped clients in 2020 and 21 when we were buying property for like 250K. They got the roadmap that was based on 250K to 300K. You can pretty much tell in 2025, it's completely useless. So just be aware that it's not just one system that fits all. You need something that suits you and your needs because your goals are different to mine and your goals will be different to all of the other clients that we actually have. That doesn't mean we can't draw from the experiences of those people, draw from the mistakes that they've made and we can learn from so that we can execute with speed on your portfolio. Now let's go through an example here. Shashank, a construction engineer originally from India, moved to Australia in 2017. To study and explore new opportunities. By 2023, after several years of saving, Shashank was ready to dive into property investment after educating himself through my YouTube content. Shashank's journey has only just begun. With plans to purchase a second property soon, he aims to build a portfolio that generates passive income, enabling financial independence within a decade. Now, I've got a deep dive video podcast with Shashank on this channel. So after you watch this video, I will have a link in the description box below where you can see client stories, real podcasts, and you can deep dive into what their experience really was. And Shashank really explains it well because he was out here investing and he was saving his money and then going, okay, I've got to get into property, and that property has grown by 28.4%. It's now worth $565,000, and that passive income number changes depending on what the interest rates look like, but he is well on the way to building his foundation portfolio well ahead of what he thought it would initially take in terms of time. We also have Kara, and I'm going to have that podcast linked below as well. But Kara and her partner embarked on their property investment journey in 2021, driven by a desire to build wealth and secure financial freedom. In 2022, Kara discovered Ravi through YouTube, who emphasized strategic property investment. Kara trusted the recommendations to invest in Perth despite concerns about the market's historical volatility. I can tell you now that in 2020 and 2021, there was hardly anyone wanting to buy in Perth. And based on our research, based on the talent that we have and our buyers agents on the ground, the lead data that was presenting itself, that would go on to then trigger one of the biggest property booms across any city in the world. So purchasing in Perth was the right property, right place, and at the right location, which encouraged Kara and her partner to reinvest in North Queensland. Kara and her partner are now looking to purchase their third investment property, and you can see now that their portfolio is worth more than $1 million, And when they started, they had really no idea about how they could build this wealth out. They've seen the videos on YouTube, they've seen the social media posts about buying multiple properties, and they didn't really know how to start. Now they've got a portfolio that grows more than $100,000 tax-free every single year. So if they decided not to do anything else and no longer invest, they will continue having a machine that keeps growing and compounding. Now you might be someone who is stuck in this position where you've been told that you should just buy in Sydney, buy an apartment at least, and that way you can grow your wealth. Now Costa made this mistake and he thought he knew what he was doing, but the numbers suggest otherwise. He found me on YouTube and reached out to help him with his next buy as he didn't want to make the same mistake. And what he did was in 2017, he bought a property for $550,000. It was an apartment in a really good suburb in Sydney. Because there were so many developments coming into that area, in 2024, the property had only grown to $562,000. Now, after 7 years, it had grown by $12,000. And although on paper, people would say, well, okay, at least you didn't lose money. If you think about inflation, how much the interest costs were, he actually did lose money. Now, at the same time, if he had gone ahead with one of our recommended properties in 2022, he would have bought that for $368,000. It would be worth $472,000 2 years later, and that would mean an increase of about $100,000, which means he would have now the deposit to go and purchase another property. His portfolio would now be worth close to $1 million, and he would only have had to save the initial deposit on the first property. He uses the equity from the first property to purchase his next one. You can see how compounding the right properties can get you to financial freedom, and how if you buy the wrong properties, it compounds the other way and can negatively affect you quite badly. Now, how many times have you heard this or said this yourself? I'll buy something now which is not my forever home and then convert it into an investment later. This is one of the most common mistakes people make. Investing is based on logic and it should be relied definitely on statistics and research. Now you look at what the majority of people do and do the opposite. Why? Because financial freedom is a life that less than 1% of the entire population will ever get to experience. So if everyone is doing the one thing, which is usually buying an apartment or their first home because they get the first home owner grants, they rely on that property to then give them financial freedom, they never get there. Instead, I would be going ahead, investing in the right locations, and instead going through this concept of rent vesting. Now, I'll use my example when it comes to rent vesting, a concept that I've spoken about to Mark Burris on his podcast and been on Channel 7, The Sunrise Show, a few times talking about as well. I rent where I live and I buy where there is growth. I've been told by many people that if I'm renting, I must be poor. But if I look at the numbers and I look at this logically, I get to live exactly where I want to live, no compromise to my lifestyle, and I get to continue building out my wealth and being on the property ladder. That makes a lot more sense than to just buy something because I need to buy something. And an example here is the 3-bedroom penthouse I live in now. It's a really nice penthouse and it's really close to the Sydney CBD. But if you bought this in 2019, it would have cost you $2.1 million. In 2023, it was worth $1.8 million. After you look at the negative cash flow and the lack of growth, you would actually see that this investment would have lost someone more than $500,000. You compare that to what I actually did, which is I rented here and I was okay paying the rent, to then go ahead and use all that cash to be able to go and pick up a portfolio. I would use the equity from the first couple of properties to continue building my wealth. And in 2019, I bought $2 million worth of real estate. In 2023, it was worth more than $3.5 million. That means I was further ahead by almost $2 million when you compare it to what my scenario could have looked like. Now you can go ahead and replace the 3-bedroom penthouse with a 1-bedroom apartment in Perth, Brisbane, Melbourne, or Sydney, or it could be a 4-bedroom house that you have in Western Sydney. Just replace the numbers, take out the emotions, and if the numbers make sense, then you should take that option. Rent is not dead money if you know the rules of the game. And it's very important to understand as we go through this next part. Now in 2024, the national average for growth in properties was 5.1%. The average annual capital growth for SP clients was 13.3%. The average deal size was $550,000. So despite people talking about properties being really expensive, you can't find properties less than $600,000 or $700,000, we bought more than 553 properties last year, and at an average price point of $550,000. Average negative cash flow for year one was $7,500, and that was before you have all of the depreciation and the negative gearing that you would get and claim against your tax as well. The average cash on cash return in year one was 73.15%. This means for every dollar I put in, I was making a return of 73%. The best way to understand this is if I put $1 in to what this system looks like at Search Property, I was generating 73%. If I put the same dollar into the share market or ETFs, I may be generating 10 to 12%. So you can see how one compounds over the other. We bought across 6 different states, and the minimum funds required to get started is $90,000. That would cover all of your costs, your deposit, your conveyancing fees, your upfront fees as well for us. Now, if you don't have a pre-approval yet and you're looking at getting started, you can still contact us. I'm gonna leave a link so you can book in a free call with our team. We can help you from start to finish when it comes to actually getting goals on paper, having the right strategy, to even finding the right people that combine to be part of your team. Now, here are some of the recent deals and performance. Now, these aren't just cherry picked, because you can go ahead to Instagram, you'll find a bunch of deals on there that we continue to share. And the reason we're so transparent is because we're proud of what we do. We do this ethically, achieve it in the right way, and we do it right by our clients, which is why clients come back time and time again to continue building their wealth with Search Property. Here you've got properties in Queensland and Western Australia. You can see on the first deal, the purchase price was $440,000, which is now worth $525,000 only 12 months later. And you can see it's a relatively new build, which means they will get some depreciation in that case as well. A cash on cash return of 88.2% is not bad if you ask me. The same thing can be seen over the 18-month period when you go across to Queensland and Western Australia. In Queensland again, 128% return, and then in Western Australia, 152% return, which is absolutely absurd. And as part of our projections, we also look at what the cash flow looks like over the next 10, 20, and 30 years. We also look at conservative growth rates, so when things do calm down, or we see downturns in the market, we've accounted for that over the longer period of time. Here are some deals that we've just recently bought. So here we've got on the first one, $460,000, a rental yield of 5.7%. The next one here is $540,000, rental yield of 5.6%. And the next one that we have here is for $580,000, a yield of 5.6% again, which are really good numbers. It provides you good cash flow. And although interest rates are higher at the moment and you might get some negative cash flow there, you do get some tax benefits while growing a portfolio with good quality assets. So how is Search Property so different? There are so many buyer's agents out there. Some people who were working at a bakery yesterday are now a buyer's agent. You've also got a bunch that pop up on your ads as well. So why Search Property? Why pay the little bit extra to get the quality service? Well, in 2024, we outperformed the national market by 8%. The national average was 5.1%. The SP performance was 13.3%. Our focus is on long-term portfolios, so a buy and hold strategy, none of this flipping, none of these renovating projects. We can look at those, but we look at that for clients later in the process. I want you to build a foundation portfolio which is boring, set, and forget. Our strategy check-ins and portfolio health checkups are completely free. So that means once you've bought property with us, you're in our ecosystem, we want to continue helping you build your portfolio. That might mean that you purchase one now and you can't purchase again for 12 months. We want to keep you updated with what the valuations look like, what's happening in the market, and you can always contact your account manager at any point after you've purchased as well, and there's no costs associated with that. We get no referrals and no commissions. So if we recommend someone in terms of the real estate property manager or the pest and build guys, we get no kickbacks, no commissions. And that is very important because if you go out there and buy off the plan properties, they get kickbacks from developers as marketing fees, and that is going to eat into what your wealth actually looks like. So on one hand, while some people will say they only charge you a little bit, they may be making money in other ways. We are completely transparent about how much we charge, and we charge it up front to you as the client. And that's because we provide a service to you and we want to absolutely smash that service so you continue to use our service time and time again. We have a team of 50 full-time staff and we've got an office in Sydney so you can come and see us in person, which makes a big difference because you're spending a lot of money and you want to be doing business with people human to human. Now you can go ahead and pause the video here, read through some of these 5-star reviews on Google. We've got more than 220 5-star reviews and you can check that out on Google itself, or you can pause these videos, look through the experience of Andrew, Amit, Vincent, Mitchell. These are just a handful of case studies where you can look at their experience. But again, you can go ahead and look at the podcast with clients and their results. You can check that out on the Personal Finance with Ravi YouTube channel. Now, is it actually worth it? You've gone through this entire thing and said, how much is it going to cost? It's $18,000 for the service. You plus GST because that doesn't come to us, it goes to the government. Thank you, government. But if you're putting out a cost of almost $20,000, you've got to know you're getting the return. Are you getting the value? Because if the value stacks up for you and you're now making $80,000 from the $20,000, well, then you're going to think, I put $1 into this machine, I get $4 back. It's an absolute no-brainer. So if you have to buy, can you do it with confidence? How long will it take you before you make that purchase? If it takes you 6 months to do the research and finally buy the property, and you're hoping it's the right one, in a market that grows by say 10%, on a 500K property, just waiting 6 months means that now that property is worth $25,000 more than if you had bought it 6 months ago. This is why we've had many conversations with people 6 months after they've had our initial chat to say, okay, Ravi, I believe you. Now I need your help. And they move a lot faster because they've realized it's actually quite difficult to execute with these numbers at speed. Have you looked at one market or are you looking at all of Australia? And what happens if something goes wrong? Who are you going to rely on? Because I've already told you, we've got a dedicated account management team that's going to be there every step of the way with you in the process and after you've purchased. That is so important because problems will occur, whether that's with tenants, whether that's with flooding, whether there's issues with the property itself. You want a team of experts that you can rely on to talk to and get feedback from. That is completely included in that cost as well. So imagine paying $18,000 to get into a deal that achieves 13% capital growth in year one. On a 550K property, that's $71,000 worth of equity from that 18K, which is almost a 400% return on the dollar that you spent. Now, your frequently asked questions, which is we get to this point, I've had over 1,000 strategy sessions with people. I know usually where you're at. You might be thinking at this point, I want to book in the call, I want to get started ASAP, let's do it. But here are some common questions that people have. I'm going to go through them really quickly. What happens next after this session? Right now, what you need to do is you need to have a chat with your partner. You need to get onto a phone call with our team. Whether you use our services or not, it's a free call. So I urge you to have that conversation, start getting wheels in motion when it comes to education to then converting it to action. If I want to engage your BA services, what is the process and the costs? It's exactly what we've spoken about in this video. You can rewind, go through it again. There's usually a deposit component and then the rest of the fee, which is the bulk of the fee, gets paid at settlement. So you're not having to pay upfront everything, get started quickly, and then you can pay the rest of it when you actually settle. What does the BA actually do? Well, for us, we've gone out there and got an account management team, which helps you as the client, but we have a sourcing team that's dedicated to speaking to agents, getting off-market deals, pre-market deals, and negotiating really, really well. In fact, at this point right now, we have the best sourcing team in all of Australia. I can say that with confidence because I know what the other players are doing. On average, it takes us anywhere between 5 to 7 weeks to secure the right properties and get you settled. On average, our competitors are usually between 14 and 20 weeks. And that is a major difference if you're going out there and finding the right properties. I know we have the best sourcing team, and I say this tongue in cheek because a lot of our sourcing guys get hit up by these other competitors and they go and tell me anyway. We are providing the best service for you as a client, and it's why people want the talent that we have in our team. How do you inspect the property? Do I need to physically go and visit the property? Definitely not. And this is where it comes down to having the industry partners and the connections in the right place at the right time. Because we can rely on these people to go out, do the inspections for us. We have a really good working relationship with a lot of inspectors and a lot of property managers, meaning that they want to maintain long-term relationships with us and therefore provide us the most transparent answers, and it's allowed us to avoid big mistakes that I know other BAs have picked up for their own clients, or we're able to negotiate a lot harder to get the right deal for you as well. The question you need to ask is it better to buy an investment property always over a principal place of residence? That is something we need to discuss because you might be in a unique situation where one is better than the other, and it's something that we want to discuss over the phone with you. How do you manage an investment property? Is it difficult? As you've seen with this entire video presentation, you know that having the right system and the right team allows you to get through this entire process and build a lot faster with more confidence. So you get less headaches by buying with the right people and with the right team backing you as well. So it's not difficult at all. From the point on coming on board as a client, how quickly can you find a deal for a client? Well, because I mentioned to you, we have the best sourcing team out there. Our time for you to get started is a lot less than our competitors out there, and I'm very proud to say that. We can go out there and get you started within 2 to 3 weeks from you coming on board, knowing what your goals are, what the strategy looks like, because we are constantly hunting for property. And do I need a pre-approval before joining as a client? No, you don't. We can help you with that process because we have industry partnerships out there as well with the right brokers who can structure you the right way, and they only specialize in investment property structuring. So can they help you if you have an investment portfolio? Yes. Can they help you if you have a principal place of residence or an owner occupier and you want to refinance or take some equity out? Yes. Are they going to help you purchase your principal place of residence? No. They are specialized in investment properties. They are specialized to go, how do I take you from one property all the way up to 6, 7, 10 properties, whatever you desire as part of your goals as well. I hope you guys have enjoyed this video. I hope it's brought you a lot of value. And at the very least, if you've watched to this point, you should definitely go ahead, book in that free call now, speak to the team. They're very helpful and they'll guide you in the right direction as well. I'm very proud to say that if our service is not suited for you, they are very transparent on the phone. It's how I've taught them to speak to clients and speak to people like yourself, because we're in the game of education. We're in the game to help people that actually want the help, and they're gonna get the value that they actually want. If they're not, and they're looking for something cheaper, we're probably not the right option. But if you're after something that's comprehensive with the right team of experts that have done this time and time again to get you to your goals, well then go ahead, book in a free call and watch the podcast that we have with real clients about their real stories. Thank you so much. I'll catch you guys in the next one. Thanks guys.